Hello, this is George Pruitt, author of the Easing into Easy Language series. It is a series of books discuss easy language, but today we're going to be discussing Python, my favorite programming language. I've been programming for 30 plus years. Let's see. No, actually 40 plus years. Yeah, 40 plus years. And I'm also the author of the Trend Following Systems and my Python backtester, Trading Simula 18. Today we're going to do a backtest on a Bollinger Band system. So I wanted to show you real quick how we can get that up and running and do a complete test. The first thing you need to do is you need to import a whole bunch of different libraries. You got to say from backtesting, which is a new library. I think it's relatively new, from the Python. You can pip install this if you like from Python. We need to insert backtest. Oh, and I got to do strategy too. That's very important. And then we got to do from from backtesting. And these are we're just importing libraries that we're going to be able to use to succeed in backtesting just a simple Bollinger Band crossover system. We've got to import the crossover function. And then, can't forget this. We got to do the backtesting test, which does all the I guess the report generation. Report generation. So let's do that. Import. We're going to do SMA, and we're going to go ahead and import. I think this test is going to be on Google. So okay, so we got all that stuff. Oh, misspelled that. Let's go ahead and create a class. I'm sure all you know what a class is, so we won't go into detail about that. We'll call this SMA cross. We're going to have to pass it the object, which is a strategy object. So we're going to do that, and then let's go ahead and define the init, of course, part of the class. And then we got to do this, and we got to do that, we got to do this, and if you're not into the classes and you don't know much about Python, there's no way you could really backtest something on a portfolio. So let's just say, let's not do this. Instead, let's just open up a template from Trading Simula 18. Okay? And this template is going to test the same idea. We're going to do a Bollinger Band penetration. It's going to be 80 days. If the close crosses above the upper Bollinger, you'll go long. If it crosses below the midpoint, you'll go flat. Go short if it crosses below the lower midpoint. The lower band. Go flat if it crosses back above the midpoint. And here, this looks totally different than what we were just typing. Now, of course, you could just type everything we just did, and you could store it, and then you could modify it to whatever you need to have it modified to. But Trading Simula 18 is a complete backtesting platform. 95% of all the work is done for you. If you buy the book, you get a small sample of data. I use Pinnacle data, which I think is some of the best continuous contract futures data that is available out there for a very reasonable price. For $100, I think you can get a very deep history of 40 to 50 markets. So let's just jump into this thing real quick. I'm going to do this in as fast as I can. See if I can break a record here. What we got to do, we want to start test date. Oh, that's nice to be able to just go in there and set that. We're going to start in January of 2010. We're going to let it run through the end of the data, which I think is like through August the 3rd or 4th. I'm going to ramp up. I need 100 days of ramp up because I'm going to do a 80-day moving average and an 80-day standard deviation, which is just a Bollinger Band. I'm going to do a net capital at $100,000. I'm going to set $100 commission. Do I need any of these class-based indicators? Hear the word class again, like I was giving the other program a hard time about using classes, but TS18 uses classes. If you get the book, you will learn about these classes. But the instantiation and the information that you need to know to use these classes Doesn't require you need to know how to build the classes. You just need to know how to use them, and I go in detail in the book how to do that. So you can ignore all this stuff unless you're going to use the Laguerre. Are you going to use a parabolic? No. Stochastic, I'm not going to use stochastic. RSI, no. MACD, no. Dominant cycle, no. I'm going to use the ADX. No, let's go ahead and turn that off. Save a little bit of time. Let's turn that to false. Okay, so the name of the system, let's do this again. I forgot to put that in there. Bollinger Band for YouTube. That's the name of the strategy. Okay, so I can skip all this stuff. I don't need any of this stuff. It's just this includes market list to get data. Is it a stock? It's going to be false because we're going to be doing futures trade testing. Okay, I don't care about that. Here I'm create some lists that I might need to use. Right now I'm not sure, but I've got some of these temporary lists already invoked in case you need to use them. I can skip this. This is all about how to instantiate the indicator classes. We are not using any of those, so we skip that. So we're going to skip all this stuff. And here I'm going to do sector list. We're going to do sector analysis. So let's just keep that turned on. And I'm not going to use my Quandl database, which is what you get with the book. I'm going to use Pinnacle. So it's set up for right now. It's set up, the TS18 is set up for sector analysis and analysis using the it can use the CSI database, it can use the Pinnacle database, it can use the Quandl database, and if you set up the data master appropriately, you can use your data, whatever data you have. I also demonstrate how to pull stock data using Yahoo Finance Fetcher in the book if you want to do stock testing. So all I need to do is I'm going to define the sector universe using Pinnacle. And I've got, like I said, 3 defined already. I've got Quandl, CSI, and Pinnacle. So I can skip the do not change code below. Oh, that's cool. Do not change code below. We're not going to do that. Start programming your ideas here. And what I'm going to do is I'm going to go ahead and delete everything here. And we're going to do it from scratch real quick. Okay, the Bollinger Band consists of 3 bands. You got the up band, the mid band, and the lower band. Upper band, lower band, mid band. And what we're going to use is we're going to take a moving average of 80 days. We're going to add 2 standard deviations to it. That's going to be the upper band. We're going to subtract 2 standard deviations below the moving average, and that's going to be the lower band. So how do we get the Bollinger Band calculation? Well, I've got a bunch of indicators already pre-built into the TS18. And all you got to do and understand is how do you call these indicators. Now this is a non-class based indicator, and I go in the book and I differentiate what is a class based indicator and what is a non-class based indicator. I'm going to talk about that today. I'm just going to show you how to use the TS18 to get you up and running as fast as you can with as little trouble as you can. So I can use any words I want to do. I'm going to call it up band, comma, down band, and I'm going to do mid band. What is that going to be equal to? Well, it's going to be equal to the Bollinger Band indicator, and Bollinger Bands is built in to my Trading Simula 18. What I'm going to pass it my date, my high, my low, my close. That's just the current bar of data. Those are lists, and they contain all the data that we will need for this test. Okay, and what do I need? Well, I need my close. I'm going to do all my calculations on my close. I'm going to do an 80-day moving average, and I want 2 standard deviations, and I want to key it off of the current bar that's in the loop. All back testers are just loopers. They keep looping from one day of data to the next. So I'm going to use the current bar in the back test, and it could be current bar could be bar number 8, bar number 9, bar number 10. It's just the number of bars as you work your way through the back tester. And then I want to offset it by 1 bar, meaning I want to use yesterday's close to calculate the Bollinger Bands. Okay, that's called the offset. All my indicators, parabolic, Bollinger Band, Keltner, whatever, it has an offset. So you can say, oh, I want it 5 days ago. What was the value 5 days ago? Then I would use an offset of 5. Okay, so we get that. And what do I need? Where do I buy at? Well, I buy at, my buy level is going to be equal to my up band, right? But the thing I want to do is I want to be very accurate. When you do a standard deviation calculation, you get values that aren't price denominated. Like for example, if you're trading crude, it's $110 or $89.50 a barrel. We could get like 89.5076274217. Well, I just want to round this to an exact price. If it falls between ticks of the minimum tick value, I want to round it up to the next tick. So let's go ahead and do the round function on up band. We're going to round to nearest tick. This again is a built-in function. You don't have to worry about it. It does it for you. I'm going to round to nearest tick the up band, and I'm going to round it up, and my min move. My min move is the whatever market you're testing. In crude, it's a penny. In soybeans, it's a quarter. In other markets, it could be 50 cents. So, but my min move handles all that for you. Each market, all the properties of that market is there at your disposal when you need to use it. Okay, so there's our buy level. Our short level, we used to say sell level, but TradeStation got us saying sell short now. So we're going to go nearest tick again. We're going to do, we can make sure we're typing the right words. I'm using PyScripter, so I know that these two words are the same. I'm going to do down band. I'm going to do one. I'm going to go down, -1. I'm going to round down. In my explanation, or in the code of the nearest tick function, in the description, you understand what the parameters are. We pass it the parameter, either rounding up or rounding down by the min move, or whatever value you want to put in there if you want to use it for some other function or capabilities. Okay, where do I get out? I get out at the mid band, right? Long exit, and I do like to use the camel case. Long exit is equal to, I'm going to do round to nearest tick. Might as well just copy this, make it faster. Let's copy the whole thing. And we don't want down band. We want to round, if we're long, we want it to round down, so the down is right, but we want mid band here. Okay, that's the middle of the band. We're going to do long. We're going to do short exit now. And these words, short exit, long exit, I could name anything I wanted to. I could say buy point, short point. I could say buy here now or short here now. Whatever. It's up to you. You name your own variables. So we're going to call this what? Short exit. And we're going to round up this time to the nearest tick on the mid band. Mid band, of course, is just the moving average. The up band is 2 standard deviations above. Down band is 2 standard deviations below. Here we're telling you 2 standard deviations of the 80-day moving average. Okay, let's put in some buy logic here. Now, I'm going to do a little fun stuff here. We're going to do some sector analysis stuff. I'm just going to throw this in there because it's so fun to do this type of stuff. I'm going to show you, what did I do with that? I could do, here it is. Let's do a sector. Let's do I just did this a while back. Where's my sector? There it is. I'm going to show this to you. This is really a cool part of TS18. TS18 will do sector analysis. If you run a portfolio that has multiple sectors, in this case, I'm doing Pinnacle data. This is the sector analysis of the currencies. This report is generated once you run the program. So here is how the currencies have performed over the last 5 years. You got British pound. I know BN. Pinnacle uses unusual symbology because the old symbols BP would stand for like the day session, I think, only, whereas the BN is the combined day session and the overnight session. That would be British pound, Swiss franc, Australian dollar, dollar index, Euro currency, Japanese yen, Canadian dollar. So here is the performance of the Bollinger Band system. This is not the exact system we're testing, but it kind of gives you an idea how the sector analysis is. So you have the sector, and here is the kind of like a tabular graphic of how the performance of the currencies has done for the last 4 years. I'm sorry, I said 5 before. Hasn't done too good. The energies, I bet you, is on the other hand, is a lot better. And here's the currency the energy sector. And as you can tell, the energy sectors have gone straight. It started, back in the pandemic, early 2020, it took off. Then it took off, and recently we've had $100 and something a barrel for crude oil. So those are the sectors. There's a lot of sectors in this test, but I love looking at sectors because it can help you determine if your trend following system should focus on a particular sector. Now, is that curve fitting? Well, why have sector analysis if it's curve fitting? So, there's some markets that the trend following systems just don't do well on, okay? And the sector analysis can help you figure that out. I'll leave that up to you. What we're going to do is we're going to go ahead, and we've calculated all our entry and exit levels. We're going to put in some buy logic, and this is a template. So if I'm going to actually get in on a stop. It looks like that's what I'm going to do. And here I force you. This is the only work that you have to do in Trading Simulator 18, and the reason I do this is because it allows you to be more. It allows you to have more power over your trading decisions. On TradeStation, you got to say, well, if I'll buy next bar at such and such price. Well, you don't know if that gets filled until you get the fill on your back test, and then you don't know. Say you have 5 entry orders, you don't know which order got filled unless you analyze the price it got filled at and all this other thing. So, by the way I do it, you know if the order is going to be filled or not. Okay, and then you can make decisions based on that. What I'm going to do here is I'm going to say, okay, had to pause there for a second, had to figure something out. I'm using a template where I'm using a single day delay to get into the market, but I'm not going to do that. I'm using this as a stop. I'm calculating my bands from yesterday's close. I'm going to say if the current high of the today, if the high of today, if my high current bar is greater than or equal to buy level, and market position is not equal to 1, meaning that I'm not already long, and sector positions is less than 2. Now what I'm doing is I'm only allowing you to get into 2 markets in each sector. I'm limiting sector exposure with this analysis. All this stuff is calculated for you, okay? Sector positions, all that's done, taken care of for you. So if you want to say, okay, I'm testing, 8 sectors or 7 sectors, and I only want to trade 4 markets out of each sector. Now these sectors, first come, first serve. So if you hit the first 2 sectors in the energy, say today the crude gets filled, and then tomorrow the heating oil fills in the first, and then you got the natural gas that fills later, it's going to take the heating oil. So it's first come, first serve on the sector allocation. So we're only going to limit our sector exposure to 2 markets. Now, if we already have the crude and the heating oil on, and an order is generated in natural gas to go long, we'll ignore that order. So this is incorporating some really neat stuff. So we're going to limit sector allocation to 2 markets per sector. Okay, try to do that in a backtester, Python backtester. Okay, so what we're going to do is we're going to say, okay, if my high is greater than or equal to the buy level, well, that means I got filled, right? So I'm going to set my price equal to the buy level. What if the market actually, it's a weekend, and we had some news over the weekend, and the crude gaps through our buy level? Well, the market opens beyond our buy level, we would be filled on a back test at the open of the bar. So what we got to do is we got to say max my open, and here I'm forcing you to do this. Like I said, it's not 100% done for you, but it makes sense for me to do this. So my price is going to be equal to the max of the open of the current bar or the buy level. 95% of the time it's going to be the buy level, but sometimes you're going to have a gap through that buy level. I'm just going to call this the bowl, the signal. I like to give my signals names because you can go back and reference those names and make a decision based on which market or which signal got you into a position. We're going to call this bowl YouTube buy. Number of shares is going to be based on position size. What is position size? Well, position size, I've not defined it, but what I'm going to do, we're not going to do any money management at this point. We're just going to set equal to one market. We're going to limit sector exposure to two markets per sector, but we're only going to do a position size of 1. Now, of course, you can do all kinds of different calculations from precision on position size. You can incorporate the portfolio balance as of the end of yesterday into your calculations. You can use fixed fractional, you can do fixed ratio, whatever you want to do, you just program it. So we're going to do position size equals 1, and then what do I need to do? Okay, I've got my long entry programmed. How do I get out of the long? I got to program the long exit. Okay, we've got to tell the computer what to do. If MP is equal to 1 in Python, remember equals is a double equal sign. It's not an assignment. That's a Boolean comparison. And my low of the current bar, that's I'm sitting on today's bar. If the low of today is less than the mid band, which is the long exit, less than or equal to. Remember, you always got to use less than or equal to when you're using stop orders, when you're comparing your price to the point where you want to get in or get out. And I want to make sure I've been in the trade at least one day. I don't want to get in and get out. You know, I'm just going to give them, if it happens, it'll take another day to get out, but that's okay. I don't want a knee-jerk reaction to getting out of the trade. Okay, then I got to do price is equal to, well, here's a little twist here. I'm going to say min, because if we're looking to sell and the market gaps below our sell point to get out of a long position, we need to go ahead and get out at the open. So we're going to say my open per bar, current bar, or we're going to do long exit. Okay. All this other stuff. Oh, we got to let's do bowl long. Let's do long exit UT. Let's call it yeah, L. And you can name these anything you want. Whatever's descriptive for you. YouTube. You don't have to worry about any of this stuff. These are functions. This is a template. It's always best to build a trading strategy using a template. You don't want to always start from scratch because you got to remember, import pandas, import NumPy, import backtester live, import Google, import Yahoo, all that stuff. You don't have to worry about that with a template because it's already done for you. I'm gonna do the other side real quick. I'll do that and I'll come right back to you. Hold on. Okay, so I went and really quickly just modified our short entry mechanism and our short exit mechanism. If my low is less than the short level, then go ahead and go short, and market position is not equal to -1, which is short, and I only have I have less than 2 sectors positions on, meaning I only have 2 markets or less in that current sector in a position. Then I'll go ahead and initiate a Bollinger YouTube short, and then the exit is basically the same. When you program the long exit, you just have to flip it over for the short exit. That's all there is to it. So when it comes to programming trading systems, 50% once you program the entry, one entry, the short entry is basically programmed for you. You just got to go in there and make the modifications, compare the low and the short levels and the short exits and the high. Okay, so if I'm long, MP equals -1, and the high of the current bar is greater than or equal to short exit, and bar sin situ is greater than 1, then I'm going to get out. And here I'm using the max again to determine if the market gapped above my exit. Okay, that's it. That's the code. That's the entire code for sector analysis, limiting the sector exposure to 2, and using your Bollinger Band system to enter and exit trades, and the position size is going to be equal to 1. Let's go ahead and run this real quick. And that's the beauty of using like idle or PyScript or Sublime. is you run it right directly from the editor. So you just have to hit the button. And here is all my Pinnacle data. Ed Pavia calls it the continuous linked contract data, CLC data. And he gives you, for $99, he gives you the non-adjusted data. He gives you the, he calls it Rev, that is the continuous back-adjusted, Panama back-adjusted data. And then he gives you the ratio adjusted as well. But I'm interested in just Rev. So I could just pick AD, which is the old Australian dollar commodity symbol. Or in this case, I'd probably want to pick AN Rev. But I want to do a portfolio. We're going to do a big portfolio. Okay? We're going to test Donchian big. And this includes like 40 markets. Okay? Let's do it. And I also, with the TS18, you know what's happening when the market's running. Here I'm loading all the data. I'm loading all this memory and all this data into memory. This computer I'm actually programming on is quite slow. If I were to put this on my faster AMD, I think I guess 5 or 7 chip, it would be a lot faster. And again, I have a solid state drive on that computer. Hold on one second, I got a problem. Let's fix that. Hold on one second. Sorry about that. I fixed that. I thought I had defined sector positions. I'll just go ahead and put it right here for right now. The code. This code is already put into another function that you can call. But instead of calling the function, I just regurgitated the code right here. And this is where I'm calculating sector positions. Sorry about that. I'm going to run it again. Here are the sectors it's testing. Sector 1 is the pound. That's just currencies. This is sector 2. That looks like the energies. This is metals. This is grains. This is the bonds. T-notes, interest rate based markets. This is sugar, coffee, cocoa. And this is, I don't know what this is. Cotton. I think that's cotton. That's the softs. Okay, so you have 7 sectors that we're working. We're only going to trade the first two markets in each sector, whichever gets hit up first in. And then, so if you're long the British pound and the next day the Swiss franc is hit and the Australian dollar is hit, it's going to ignore the Australian dollar. So it's going to take the Swiss franc. Okay, as you can tell, it's starting to work on this computer. Okay, we're testing what, 8, 12, 30 something markets going back to 2010, and I'm going through each market each day. Instead of each day in each market, I'm going through each market each day. Meaning I go through on the first day of testing, I go through British pound, T-note, Swiss franc. I'm spanning the portfolio horizontally, not vertically, so then I can make a decision at the end of each trading day what my market data, what the sector positions are, what my portfolio positions are, what my portfolio profit is at the time, what the portfolio open trade equity is at the time. I do all this analysis at the end of each trading day so I can use that information on the next trading day. So we can sit here and let it run, but I'm going to pause it so you don't have to wait. Okay, once the test is completed, you'll get a breakdown in the Python interpreter window of that's quite a bit of data of the test. Let's grow this real quick. But of course, all this information is available in the test output files such as trade by trade report, portfolio analysis, position matrix, blah, blah, blah. And I'm going to show you real quick the position matrix that's outputted, and it's outputted on a daily basis so it can be accessed by the program as it's running. For example, on the first day of the test, you're saying, how can it trade on the first day of the test? It didn't have that ramp up. Well, fortunately, all my data goes back further than 2010-0104. So my ramp up occurred before that. So on this particular day, I went long. Here is the this right here is the currency sector, and it looks like it went long 1, 2, 3, 4, 1, 2, 3, the dollar index and the euro currency. But as you can tell, this sector, there's only 2 positions put on this sector, and you can see ones and ones, but a lot of zeros, and it's because I'm only allowing 2 entries in each sector. So that worked fine. Okay, and then we did the analysis. The system didn't do that well because of we're limiting it to 2 markets per sector. Made $222,000 over a 12-year time period. Here's the combined equity curve of 30+ markets using our sector analysis. As you can tell from, what is this? Yeah, here's about the beginning, the genesis of the pandemic. Of course, it's taken off, had some pullback, and of course, this is a consequence of limiting to 2 sectors. So why reinvent the wheel and have to remember all these weird class things and all these weird import libraries? Just buy my book. You get this whole thing. I mean, I tested 30 some odd markets using that portfolio analysis, and we do all kinds of analysis, like Monte Carlo analysis. Here's my Monte Carlo. This is my alternate histories for 100. Looks like on average you will always have $237,000, $159,000 drawdown, $152,000 drawdown. So this is just a I've tried to put everything into this code, into this backtesting platform, so it'd make it easier for you to get up and testing ideas. You don't want to spend 90% of your time trying to figure out what libraries you need, and there is some benefit to that type of Python backtesting. You can get instantaneous data from Google or whatever, but if you're really into doing some in-depth analysis of trend following systems using daily bars, you should really already have your database set. And like I said, I use Pinnacle data. You can use CSI data. You can use your own data, but you should have all that set. So your program shouldn't be pulling that information in when it's running using Yahoo or whatever. It should already be set. It should already be clean. Should be good data. And so once you set that up, you install the Trading Simulator 18 with as few libraries as possible. I do use some libraries. Then you should be able to get up and running using my templates. Again, and you learn the Python, the basics of Python, beyond importing these libraries and calling these library routines. You actually understand the concepts of if-then logic, looping. You do learn classes. You learn how to call functions. So it's really a cool, I think it's a really cool platform. It's commercial strength. I do have some commercial people using the Trading Simulator 18. I have of course enhanced it for them. But for the book, you get the software for free with the book, and you get a small sample of data. And so don't reinvent the wheel. Go with Trading Simulator 18. Come up with your own trading ideas. Do sector analysis. Do portfolio analysis. Anything you can dream up, you can almost, I won't say it'll do everything you can dream up, but it'll come pretty close. So I hope you've enjoyed this video, and check it out. Check me out at Amazon.com, George Pruitt, or www.georgepruitt.com. And I appreciate you listening to me today.